Hello all, it's Rishi here. So it's 12th of March and today will be another learning video. So on the previous video we saw how to mark the support and resistance levels based on the volumes. So if you have not checked that video, do check that video first and then watch this video. So today we will see how to ensure the market direction and how to confirm a breakout. So to learn about the market direction, firstly we need to check about the market trends. So there are totally three different market trends: a bullish market trend, a bearish, and a sideway. Okay. So a bullish market trend is nothing but if a market is going towards the upward direction, then it is known to be bullish. If a market is falling down, it is known to be bearish. And sideway is nothing but if a market is trading in a particular range, it is known to be a sideway market. Okay. So in bullish. So firstly, let's look at bullish. If a market is going on the upward direction, it can't go on a straight line like this. It don't do like this. Instead, it will have a low, a higher point, then it will fall down, which is known to be a pullback, and create a new higher low. Again, break a previous high and create new higher highs. Again a higher low, again a higher high. So this is how the bullish order flow looks like. Whereas this will be our low point, this will be our high, this will be our higher low. So higher low is nothing but if the market could not break the previous low. This was a previous low. It could not break and instead it reversed back before that. So this was a previous lower point which is higher than the previous low. So this is called as higher low. And here we could see the market has broken the higher point and created a new higher high. And again pulled back, creating new higher low, and again a higher high. So basically this is how the bullish order flow looks like, creating new higher lows and higher highs. So now let's look at the bearish. In the bearish, the market will first have a higher point, fall down, a pullback, creating new lower high, again a low, a lower high, a lower low. So here we could see this is a high and this is a low. So it had a pullback, creating a new lower high. So same, lower high is nothing but the market could not break these particular levels and again it fell down, breaking the lows. So this is called as a lower high, while this is called as a lower low, again a lower high, again a lower low. So this is called as a bearish order flow, creating lower lows and lower highs. So next, sideway. So sideway market is nothing but the market will be trading on a particular range. So this how a sideway market kind of looks like, having equal lows and equal highs in a same particular range. So these are the three different market trends. Okay. So these are the three different market trends: bullish, bearish, and sideway. So now let's see how do we trade based on these trends. So firstly, how do we identify the markets in a trend? So let's go for some charts. Okay, now first let's look at the order flow, bearish order flow. Here, right at this particular level, we could see the market was on a bearish order flow. How do we confirm it? We can see there was a high point, a low, a lower high, again it broke a previous high, creating new lower lows, again a lower high, again a lower low. So this was a bearish order flow. Why? We can see that after this particular level, this particular low, the market did not create any lower high and instead went all the way up till here and it broke our previous lower high. So here this is supposed to be a change of character. This is what you call a change of character. So let's see what is a change of character. For example, let's see market is on a bullish trend already. So we know if it's a bullish trend, we will have higher lows and higher highs. So what is supposed, if it has to continue in a bullish trend, then we will need another higher low and another higher high breaking these particular levels. But if the market falls down, goes up and does not create a new higher high, instead starts creating a new lower high, then this is an indication that market may have a change of character. So this was a previous higher low. If the market breaks this particular level, a previous higher low, and pulls back and again creates a new lower high, then we could say that the market has changed its character from bullish to bearish. So this is how you confirm a change of character, right? Okay. So let's look at the example here. The market had a bearish order flow creating here. So after this, if the market created a new lower high and again went down, it would have continued in a bearish order flow. But that didn't happen. Instead, the market went all the way up to our previous lower high, creating a new higher low right here, and the market has broken these particular levels. And then we could see that it is again falling down. So here, if the market breaks this particular level, which is a previous higher low, if it breaks this levels, then again the market may turn back to bearish order flows, which is bearish trend. So for that, the market has to break these levels, again have a new lower high creation, and again go down. Okay. So this is how you analyze the market structures. So let's look at some other example in a smaller time frame. Okay, let's look at a 5 minute. No, let's look at 15 minutes first, then we'll look at 5 minute. Okay. So here we could see that market is on a bearish order flow. We have a higher point, a low, a lower high, a lower low, again a lower high, sorry, again a lower low. So this can be our lower high. So if the market breaks this particular levels, then we will have a new lower low creation. So what we'll do next is we'll wait for a new lower high. Once it breaks the low, we'll wait for a pullback to create a new lower high, and then once a new lower high is created, we might enter somewhere around here with stop loss around here, and this will be our entry. Okay. So now let's see how do we use the market structure inside our setup. So what is this? Firstly, our setup is to create a support and resistance levels. So now let's look at some examples here. Okay, so let's take this chart. It's 15th of Feb chart. So here we could see that market opened with a gap down. So we will be marking our supports first. So our support was confirmed right here in this candle, while this was a previous swing low. So this is where a support was created. Then we'll be marking a resistance. So a resistance was confirmed here in this particular candle, while this will be a resistance. So once our support and resistance is created, then now we'll be looking at the market structure inside our range. So we could see market had a high, a low, a new higher high, and a higher low. So there was a new higher low creation right here. So once another higher low was created, we could have entered. All these is not a proper higher low because the candle was not strong. There was a rejection at this particular levels. After this particular candle, there was no strong candle, but yeah, we had one here, but this is not a pullback. A pullback is supposed to be on a particular length. So this won't be considered as a pullback. Instead, this will be a pullback. Okay. So here, after a higher low was created, this was supposed to be a pullback and a new higher low was created right here. So we could have entered here with stop loss below this candle and take profit of minimum 1:2. So our targets would have been easily achieved right here. Okay, so now let's look at some other example. Okay, so let's see here. The next day we had a gap up, so we'll be marking our resistance first. So our resistance was confirmed right here. So this was the resistance levels, while a support was created here, and this was a support levels. So once a support and resistance was created, let's see the market activity inside a range. So the market had a low, a high, a higher low, but this was not broken, and this was not a proper higher low creation. A higher low is supposed to be created something like this. See, we could see the market was trying to push towards the support levels. So it did not break any of these previous highs. So our aim was to go for shorts only today. But when will we go for shorts? That's the thing. So once our support was broken right here, we were waiting for a pullback for a new lower high creation. So a pullback took place, and this is where our lower high was created. So our lower high was created right here. So we had entered here with stop loss around here and take profit of minimum 1:2, which has been easily achieved here. Okay. So now let's look at some other example. Okay, let's look here. The market opened with a gap down, so we will be marking a support first, which was confirmed right here, and the previous swing low will be our support. So previous swing low was this. Sorry, a previous swing low was this, and we'll be marking a resistance next. So this is where a resistance was confirmed. So once a range was marked, we'll be looking at the market activity. So we could see that market was trying to push towards the downsides. No swing highs were broken, so it was creating new lower highs. So once a resistance was created, we were waiting for a new lower high to be created. So we had all this was not a proper place to take a trade. So instead we were waiting, and we could have took a trade right here, or once a support was broken, we would have waited for a pullback, and it was broken here, a pullback, and we could have entered here. So that is like in this chart alone we had two places to enter for a trade. So one would have been here with the minimal stop loss around here and take profit of minimum 1:2, or if we had missed that, we could have entered right here with stop loss somewhere around here and take profit of 1:2 minimum. So on either of the trade we would have hit our targets. So now let's look at some of the examples. Okay, so let's look at a chart here. Here the market opened flat but moved towards the downside first, so we'll be marking as supports first. So support was confirmed right here, and swing low, this was a support. Then our resistance, so resistance was confirmed here. This is where resistance was confirmed, and the previous swing high was this, so this was our resistance levels. So once this support and resistance was created, we could see that market was trying to push towards the lower sides, right? Okay, so once our support was broken at this particular level, we were waiting for a pullback. So this was a pullback, so we could have entered here with stop loss around here and take profit of minimum 1:2, but instead the market has hit a stop loss and then came back to our targets. So yeah, so nothing is like 100% here, it's just about the probability. If your winning probability is high, you will be a profitable trader. So let's look here. Here the market opened with a gap down, so we have to mark a support first, and support was confirmed right here with this as a support, and then we'll be marking a resistance. Our resistance was confirmed right here, and this will be a resistance. So we could see our support was broken right here, and then our resistance was created here, so we'll be waiting for a proper pullback. So once we could see there was a strong candle right here, so this is where we could have entered. So we could have entered somewhere around here with stop loss here and take profit of minimum 1:2, which is easily achieved here. Yeah, so let's look at just one more example. Okay, let's look at this example. The market opened at the gap up and then went all the way up, so we had a resistance right here, and then we had our supports, which was here. So this is where our support was created. So usually what do we do? Once our support and resistance is created, we will be waiting for a new higher low to be created. But in this case, we didn't wait for a new higher low to be created. Instead, we entered in this particular candle itself with stop loss around here and take profit of minimum 1:2. So why did we do that? It's because we could see the market was already on a huge buying trend, and this was a trending day, and we were just looking for a new higher low to be created, and that too took place after around 1 o'clock. So we were pretty sure that this particular level would have been taken off. So instead of waiting for some more time, we entered right here with stop loss around here. As we can see that there was no higher low creation next, the market went all the way up, taking our targets. Oh. So yeah, so this is how we usually trade. So we saw how to mark the support and resistance levels. We saw how to ensure the market direction and how to confirm. Now we will see how to confirm a breakout. So let's say we have a resistance and support levels right here. If this is broken here, we don't enter here. because we are not sure if this is a fake breakout or a valid breakout. Instead, what we will do is we will wait for a pullback for a new higher low to be created, and then break these particular levels. Once a higher low is created, we could have entered here with stop loss around here and take profit of 1:2. So the same goes with the downtrend also. If it breaks the support, we'll wait for a pullback for a new lower high to be created, and then we would have entered somewhere around this particular levels, right? Okay, so I hope you guys got an idea of how do we trade. So it's as simple as that. All we need to do is just master one setup. It's not necessary that you have to just follow my setup or whatever. You could take whatever suits you, and if we could master that, then it's just a simple game. Okay, so yeah, that's it for today. We'll see you on a different video. Thank you.